get to Bob Pisani, see what's moving. Hey, Bob.
Good morning, guys. Happy Monday. And this is a very powerful advance that we have today. Very broad. All 11 sectors of the S&P 500 are up. 5-to-1 advancing the declining stocks. That's a powerful rally. And this is how you know it's powerful. When you get industrials moving up with consumer discretionary, along with consumer staples and healthcare, all at the same time, cyclicals and defensive up at the same time, tech leading the way, that is a powerful rally. The big question over the weekend, everybody's been debating, is do we have any more better visibility for 2020? That's what corporations want. And it's debatable, but I think that it's a modest plus overall. Look, the Fed is neutral right now. The U.S. economy, well, the chances for a recession are pretty darn low right now in 2020, at least with data we have now. Labor defeat in the Brexit deal, that was a positive for stocks. Let's call it a truce for the moment on the trade deal. Global growth, there's a little bit of a difficulty issue. There was better numbers in China over the weekend, but a clear bottom is a little elusive. That's still a little bit of an X factor. But if you look at the way the markets are actually voting right now, they're clearly saying that things are getting a little bit better. We have an historic high in the United States, even just today. Europe is sitting at a 52-week high. Look at the ETFs over there. We looked at it last week. Japan is sitting at a 52-week high. Emerging markets, we've had a weak dollar in the last several weeks here, and that weaker dollar has been a real help to currencies over there and the economies in some of these emerging markets countries. So you look here, it's hard to argue that the global markets are terribly worried overall here, that there's better visibility. Take a look at some proxies here. Here's high yield. Excellent proxy for U.S. growth. You're sitting essentially right near 52-week highs. This is the largest high-yield ETF. HYG is the symbol there. Remember, this is a play on credit. It's not a play on interest rates. There was great concern that corporations were going to have a very ugly 2020. This would not be anywhere near a 52-week high. Let's move on and show you some other things. Metal stocks. Copper's been weak throughout the year, has been concerned over global trade issues. Copper prices have been rising recently. This metals and mining has been moving up here. We talked last week about Freeport-McMoRan and the strength. This is all based on the belief that metal prices may be bottoming. Who knows if that's happening, but the market is voting for that in the last several weeks very clearly. Semiconductors, well, no matter what you look at in semiconductors, I like looking at the XSD. This is an equal-weighted index of the big semiconductors. It doesn't matter. If equal-weighted, market cap-weighted, all of them have been moving up in the last several months. These are global moves up that we even see on the Internet of Things, and of course semiconductors being in automobiles, but also some trade optimism as well. Finally, just want to note industrial stocks overall. You want to look at a broad group like the S&P industrials here, Caterpillar near new highs, Dover, some of the deeper cyclicals as well, also voting here, sitting right near 52-week highs. And the final key point here is just interest rates slowly moving up a little bit, yield curve steepening as well. There's your final confirmation here, KBE bank index. This is the big banks, essentially, also 52-week highs. You put this all together, you could be a little cynical and say, all right, I'm agnostic about whether the market's going to move forward, but it's really hard to argue that visibility is worse now than it was a week or 2 weeks ago. I think a fair assessment is visibility is a bit better, even if you can say, okay, we haven't resolved the trade issues. Maybe they're just on hiatus. Maybe that's the right way to look at it. But certainly it's fair to argue visibility is a little better than it was a couple of weeks ago.